We've got about a minute to go. I'm sorry I'm late. I've come straight out of the staff session with Julian. They are great fun, those things, and we have run over a little bit, so we're just in now. I think the team will be flooding in as we speak, and we will be able to get straight into this as soon as we do get onto YouTube. We're about 48 seconds away from doing that. If you have any quick questions, you can put them in the questions box. If you want to say hi, you can always say hi. Hi, everybody. Good to see you all, guys. It is nice to be in this session. It was a bit haggardy in the last half hour. Cool, Mai. Just you restarted. Okay, let's go live on social media, Mai. If we're late, let's get at it. Sorry we were late coming in. Oh, brilliant. Hi, everybody, and welcome to the market. Hi, everybody, and welcome to our market overview for Sunday night or Sunday evening, Singapore, Asia, New Zealand. Good Sunday to you guys as well. Hi, everybody. Great to have you company today. It's going to be another great session. We've got the team coming in to talk about the markets and what's in front of us today as we go through the evening. We'll be in with you guys for about 35, 40 minutes. We're going to have people come in and talk about macro. We're going to have people come in and talk about data. We're going to have people come in and talk about currency strength index. We're going to have gold. We're going to have oil. We're going to have crypto. We're going to have some technical stuff. We're going to have the whole lot. It's going to be a bloody good next 35 or 40 minutes. So do stay tuned to us, whether you're on YouTube, whether you're on Facebook, whether you're on Twitter. Hang in and enjoy the show. If you're live in the Zoom session, that is great as well. Now, if you're on Facebook or YouTube, if you have any questions, post them in the questions box and I'll bring them into the group and we'll try and answer that for you at the end of each session from the presenters. We are going to move through presenter for presenter as per normal today. Looks like a beautiful part of the world behind you, Julian.
I think it's probably the only part of New Zealand where it isn't raining today, Paul.
I'm honestly surprised that I am surprised that we are on air from here, to be honest, mate. While we're not having the flooding difficulties, it has been as big a storm as I've seen here.
Yeah, yeah, we're reaching out to all our friends in Christchurch because it must be pretty awful for them. They've had another 1 in 100 year flood this year, and I think there's it's an exceptional event down there. So my thoughts are going out to them. It must be pretty rough. And folks, for those of you that don't know New Zealand very well, from where I live in Auckland, that's about 1,200 kilometres away. So Christchurch is quite a fair distance, and they get a completely different set of weather patterns to us softies up here in Auckland, who when it goes below 10 degrees centigrade think the world has come to an end. So
they get a 100-year event every year, don't they? Be it an earthquake, something happens January every year. It's a 100-year event.
I'm going with they're resilient people. They feel like New Yorkers to me. They're resilient people.
Let's get on to macro economics.
Yeah, let's talk macro, shall we? Look, folks, so when we think about the world of macro, I think there's three key themes that are really important to us at the moment, right? The first one is government spending, and I think that's a bit of a slow-moving, situation, but it's a similar message across a lot of the developed nations, right? People are spending money. Except China, which is going through some incredible fiscal restraint and some credit contraction. We are seeing the rest of the world actually spending money like crazy. It's just a question of your definition of crazy, depending on which government you happen to be. For those of you who attended my session last week, we did a bit of a teach-in for the ATW students. We saw some of those budget deficits out there from some of the major countries in the world, and they're pretty staggering to see by any type of historical standard. So, one thing's very clear is that fiscal spending is certainly running at a much higher rate. But as always, as traders, what we're interested in is something called the rate of change, right? So what we have to do is we have to think about what's in the market, and what's in the market today is that governments are spending a lot of money. Okay, we know that, we can see that. Okay, so when we think about this, what we've got to think about is what will change the way the trends that are working right now. So sell dollars, buy commodities, invest in the recovery stocks, and I guess depending on which day of the week it is, there may be a value trade in crypto out there as well. True. So what is going to change any of this? So what's going to change it is governments making a change to their policies. So starting to tighten a little bit, seeing the recovery get underway. Maybe things are going to turn around in India, but sadly I've seen some stats around South Korea and Vietnam. They're beginning another, I don't know which wave you want to call it there, but let's just call it another wave that looks quite serious for a couple of those Asian countries, which could be interesting. So there's two different countervailing forces, right? None of those are going to create governments which are going to stop spending money on either front. I don't think so. For the time being, we always look for that rate of change in government spending. And definitely, obviously, we look to the biggest country in the world, the United States, to see if Biden can continue to get his aggressive spending policies through. They're trying desperately to put a lot of money into people's hands before the midterm elections to prove that they can. And so we'll see how that unfolds. The second main theme, I think, going on right now in life is the inflation theme. Okay, so there are two schools of thought here. There's the first school of thought, which says the world has changed. This is a brand new secular inflation cycle that we're moving into. As a result of that, inflation is going to slowly start to pick up. Everybody believes inflation is going to pick up. Therefore, it will pick up. Therefore, it's going to be enormous. And therefore, we've got the beginning of the 1970s happening all over again. I sort of beg to disagree on this on a number of different scenarios. Two of them, one of them being monetary economics, which I'm a student of. I guess that's how I was trained, and supply side economics. That's my background as an economist. I think it's the inflationary spike we're seeing right now is exactly that. It's a spike. It will not be sustainable. And the other way is the good old Keynesian way, right? Which is that when you think about it, you've got to look at productivity as well, and that's improving. So I'm a little bit skeptical about the inflation thing, and I do get this story. However, right now the trend is intact, right? People are buying things because there's an inflationary story out there, and until that buying things comes to an end, the inflation story will continue to maintain itself, and therefore we have to again look for a rate of change. So when we see that inflation start to settle down, then people will have a rethink. We believe it's going to start to disinflate. I don't quite know what the right expression is. Let's just say fall back a little bit. In about 2 or 3 months' time is the beginnings of when we should be seeing those feed through to the figures. So let's keep a close eye on that, because that's going to turn a lot of markets at that moment in time. And we always know that markets tend to anticipate. So I would suspect over the next month or two, people will anticipate some changes. So be on your guard. However, in the meantime, this is a bull run in the commodity markets, and you've got to respect that. So put some moving averages in place, put some stop losses in place if you're long. And if you do get caught with a slightly long position, then, make sure it's protected. And on the other side, if the market does dip, it would make sense to be able to buy that first big dip that we see. Okay, that's how the sentiment cycle and the cycles work. The markets don't top very easily with a big one-fingered salute and then descend into oblivion. It doesn't normally tend to work that way. So we'll see. Then we'll need to see a recovery on that second wave. And if it doesn't quite make it to the previous highs, then we can rethink our strategy. So the reason why I'm mentioning this, right, is because we're seeing a little bit of this, a flavor of some of this stuff starting to happen out there. Gold is reaching a pretty important point. Ainslie will talk about this in a few minutes, I'm sure. It's on its way towards the high 1900s, possible 2000s. What's it going to do there? It's got to have a rethink about what it wants to do next. When we look at oil is sitting here at the top. Yet again on Friday, it tried to break out above, took out a few stops. For sure, people who maybe were short got stopped out and then promptly reversed on Friday afternoon and closed back inside the range again. Slightly worrying. I'm just double checking my figures. Yes, slightly worrying, but it's only a day in a trend that's been going on for months and months. So we have to preface this by saying that maybe as we've reached this point, oil still looks bullish, and we have to respect that, but it's maybe put in a very short-term top. We'll see, but it also provides us with a technical trigger now, so that if it breaks out of the high that we're seeing, so in other words, it takes out Friday's high, it wouldn't be unreasonable to think that it's going to set off to a new price level, or whatever that price level may be. Maybe we look to try and move up to $80 in Brent and the mid 70s in WTI. Who knows? But I'm going to cite that Friday's high as being pretty important now for follow through for the next wave, right? Okay. Finally, the third item, and I will keep this brief now, Paul. The third item is the pandemic. Okay, the pandemic is very important. Why is the pandemic very important? Because it's changing all around the world. Now we have a 2-speed pandemic. Okay, now we have the Americas recovering, or North America at least recovering. We have Europe trying to get on top of its vaccination program, and hopefully cases there are either falling or the state of the economies are improving in a correlated fashion. And yet in Asia, which has been protected from a lot of the pandemic because of their relatively aggressive policies at the beginning, we're now seeing some problems occurring in places like Vietnam. We all know the Indian story, so we'll move on from that. But Vietnam, South Korea, Malaysia is seeing a spike up in cases now, and so is Japan. A very worrying pattern across the, let's call it the South China Sea area. The ex-China area of Asia is now creating its own challenges because that's where a lot of the world's supply chains are located. The core of the supply chains are located. So that presents another problem about how you deal with that. I don't know whether markets are discounting that or not. Not quite sure what they should do about it. But I think right now it's a worry, and it's something you ought to keep your mind on. If some of those countries lose control of the pandemic in their own region, then there's going to be a problem. But we won't know that for another week or two. So keep your eye on those figures and make sure that you're keeping on top of it, because that could have some strange side effects. It might push commodity prices strangely even higher because of supply shortages. It might also push stock markets down because of worries over the fact that the future isn't looking quite as bright as everybody thought it was going to be, because global growth in the whole could not be as high. So bit of a double-edged response there. So look, those are my three key themes, the three key areas I'm looking at. And as always, I want the rate of change. And don't forget, the market knows a lot already. What you got to do and think about is what's its reaction going to be to some new news and how it then behaves, right? So this is what rate of change of all of those ideas is so important. Right, the ideas are in the market. I won't be saying anything new to any of you, but what I will be saying is look at that rate of change, because that will determine where markets are going to go. And a lot of these trends are overextended. Okay, the sell US dollar trend is overextended, not in every currency, but in a lot of them. Right, the commodity cycle, as we know, has done very well in many different markets, and they're all behaving slightly individually. You know, big shout to the coffee market on Friday for setting a brand new closing high, going back about 5 or 6 years, I think it is. So finally, coffee's coming to join the party. I do love that. I love coffee joining a party. It seems to sober everybody up, but gets them excited at the same time, Paul. On that happy note, I'll say goodbye.
Mate, I've got a couple of things for you before you do go. I appreciate you being around. I'm going to try and read this question to you. It might take me 3 or 4 minutes. Let me see how we go. Copper. Following the advice to check the cost of production and who are the key players, Chile and a few others, but Chile seems to be the biggest producer. $2 to $3 cost, but has to be sold above $6 to be profitable. Seems a bit weird. Wood demand is going up, and for the past few months, year has been running up with the past few weeks looking for to be a retracement, but looks like a pause before the market continues. Recycling cost of copper is approximately $4. His buying pressure is there, but I'd like to know what would be the key to factors monitoring. Read up on no doubt to feel the fundamentals of copper.
But yeah, maybe I can talk. Look, I'll talk for 1 second on that, Paul. Look, there's all sorts of moving parts to the copper story, right? At the forefront, copper is the primary element on the periodic table that is going to be part of the energy transition. If you want to electrify a car, you need copper. If you want to electrify pretty much anything, you need copper. So the demand for copper, I think, is going to outstrip where it was over the course of the last few years. Then you've got to think about the supply. And the Chilean news about a week ago that one of the biggest mines in the world is in Chile. Okay, the Chilean news a couple of weeks ago, they're looking to nationalize the copper mines. I don't think was taken particularly well by the world. So look, key stocks to think about. You can look at Freeport-McMoRan, which is FCX, which is a copper proxy on the New York Stock Exchange. I always look at that from an equity standpoint. And more importantly, what I would do with shares like this is go to their investor presentations if you want to find out about what's happening in the world and read them. They're normally quite interesting reads. They talk a little bit about financials, and most of it is about what's happening in their underlying commodity markets. I recommend you do that.
Sorry, Julian, I was away for a second. Read what?
Read their investor presentations.
Fantastic. Got a final question for you, mate. Bank Holiday Tuesday in America, Memorial Day. What does Bank Holiday Tuesday do to markets?
So normally coming into bank holidays, markets trade reasonably well. I was surprised on Friday the stocks weren't up more. I would suspect tomorrow, Monday, could see a reasonably positive market if the holiday seasonal pattern is anything like it normally is. Post that Memorial Day move or post that holiday on Tuesday, I am less than enthusiastic about the outlook for stocks.
Cheers, Julian. Thank you very much. Always